Short question. Has the NCA worked?
Well, not in totality.
In terms of the numbers that you have seen?
For some, yes. To some extent it has, but it's got serious challenges that the industry is trying to, with the National Credit Regulator and the Debt Mediation Association, trying to resolve. And I think one of the biggest shortcomings is that debt counselling, as it is provided for in the Act, provides for instances where a consumer is over-indebted for that matter to be taken to court. And that's where the problem comes, because the court procedures are quite expensive. You have to include legal representativity. And the courts in themselves face a challenge, and there are huge backlogs in the court. We are looking at about 7,000 cases a month of debt counselling coming into the fold, and only less than 10% of those are being dealt with in the courts.
So the mechanism itself is not working?
Yeah, I wouldn't say not working,
well,
because
it's got problems.
It has
it's
assisted.
Not working as intended.
Yeah, it has problems. It has problems in that, for example, it creates differentiation between instances where consumers over-indebted or where they're experiencing temporary difficulties. So although it provides for a voluntary process, a majority of the issues that come into being have to be resolved through the courts.
Yeah.
Yes.
One of the words that we've been emphasizing in all of this is that this is supposed to be a cooperative issue. In other words, there's supposed to be cooperation between the issuers themselves, the people who are in debt, and the processes themselves. Is that working? One word we've used is in the spirit of the NCA.
Well, the spirit of the NCA, remember in what context the NCA was drafted. It was drafted in the context where you had a separate micro-lending industry which was charging very high interest rates, and there were also conduct issues that the government was concerned about, and you also had separately your banking industry which was regulated differently. Those have been brought together. So the background was that government at that time had seen a lot of abuses and was trying to protect. So if you look at the mechanism in the NCA, it emphasizes the court procedure because it felt that the judiciary had to intervene between the two parties. But now in practice, we realize that that is actually not working. We would want the parties to come to some form of consensual resolution. Another challenge is that the courts are restricted in what they can provide in terms of restructuring. They can only give a payment holiday, a term extension, or a combination of both. So the magistrates do not have jurisdiction, for example, to cut interest rates, to cut fees. So those can only be done by consent between the credit provider and the consumer.
Indeed. Now, who is impeding the process, do you think?
I think, being 3 years into the implementation of the National Credit Act, there is some distrust between debt counsellors and credit providers, because debt counsellors were trying to say, okay, we have this consumer who is in trouble. Remember, we are dealing with an industry that for many years has only been doing something in a particular way, which means that if you have a delinquent consumer, you take them to court. Yeah. The NCA is saying you should understand that a consumer has a problem and you have to assist them. So for me, that is a huge mind shift from how things were done before. And in my view, that would take quite a long time.
Kobe, who's to blame here? Or should we not be blaming anybody, but essentially looking at the process that was established and see if it's working or not and try to find where the bottlenecks are?
Godfrey, I think firstly that credit is a hugely complicated subject. You've got on the one end, you've got a lender, or lenders, shall I rather say.
Sure.
Lenders are for-profit organizations. So when the rate cycle works in their favor, hence inflation continues to drop and drop and drop. Much of what we're seeing at the moment, inflation at the moment in South Africa is running at 3.5%. It's a fantastic environment for them because there's excess liquidity in the system and they're able to charge fairly low rates, because remember that they lend money again from the Reserve Bank at a certain rate, which is low, and they can lend on the money, and hence they want to make money in good times. So there's a for-profit objective as far as as the lenders are concerned. On the other end of the scale, you've got a consumer, and the consumer looks at a very low rate environment and forgets the fact that actually inflation had been very, very high not that long ago. Let me give you an example. July 2008, inflation was 11.2%. Now it's 3.5%. That's a massive difference.
True.
Now people forget about this, and people say, well, I don't think inflation will go up again. I think inflation will stay like this. And then they rack up debt. And this is where NCA helps tremendously, and where, again, a new legislative framework helps, because it helps just taper the expectation, because we can't somehow think that we're going to educate all consumers. It'll never happen. Debt to GDP in this country runs at about 80% at the moment. So it means for every rand that a household creates, they pay back about 80 cents in debt. That's
which is quite a lot of money.
Which is high. It's leverage, but it's not undoable. I mean, at some point, I think you'll pay off the debt. Especially, and again, let me also say, it again also means that we just have to somehow kind of take the bling assets out of it. Bling assets and assets that you build for the long term, such as a home and so on. All those are very, very different assets. Better to focus on the latter rather than the former. The bling assets rather than we shouldn't be providing any finance for those.
Sure. So, Magauta, if we look at the system, then is it broken, or should we be engaging in a process to educate the consumer? Educate them on the importance perhaps on not spending so much money on the bling assets as to actually going to the banks and saying, you guys need to be less aggressive and understand that the consumer needs to also survive and find a way of paying back the debt.
Yeah, I think both ways. What we've seen from the cases that we deal with is that the consumers that are in trouble are not necessarily in trouble because of the bling assets. If you look at what has happened internationally in South Africa, our economy, job losses, our low, high unemployment levels, a lot of the consumers either have been retrenched, have lost their jobs, have divorced, have had their working hours reduced, their income reduced. So a lot of them are in trouble because of those issues. So it's not necessarily a factor of inflation or low interest rates or whatsoever. It's just that some people, the income that they had before is not there anymore.
But also there's been the issue of job losses, isn't it?
Yes. So that's why I'm saying that it's not necessarily a delinquent consumer.
Yeah, but there is the aspect of a delinquent
consumers. But a lot of, in the cases we've seen, it is people who have lost their jobs and things that have happened to them that are beyond their control.
Absolutely.